There's Moody's as well reacting to India, and they've reaffirmed India's government bond ratings at Baa3. That is their affirmation coming in on the government bond rating. They are also saying that they've affirmed the stable rating on Indian local as well as foreign currency bonds, and that perhaps should, soothe the equity market somewhat. Just want to bring in George as well, a banking editor who's been listening to the S&P con call as well. George, it seems like, the fears of a downgrade really kicking in were perhaps exaggerated.
Well, it isn't exaggerated, Aisha, because, the thinking really was that they would do it after 2 years, which is any time after April 2014. And actually, Takahiro Ogawa has clarified that that's not the case, that they will not do it post-April 2014. They will do it before that. Now, how soon from now is the big question. But you need to remember that the one positive that can actually work in our favor is that if in the interim period between now and when they actually decide to move ahead with any sort of rating action on India, if the global environment, the situation over there improves, which in turn strengthens or rather improves India's external position, then you will have a weaker case for S&P to do anything. And also in the interim period, if we do have the government doing something on the policy front, which going past record is kind of unlikely, at least on that front, you then have that much of a cushion for the government to actually avert any sort of rating action coming in from Standard & Poor's. So I think the concern which S&P, the point that S&P made about a 1 in 3 chance of a downgrade, I think the concern that it raised when the release was put out seems to have, ought to have abated a little, because you have some cooling period during that time when it will actually, before which it can actually happen.
And also very quickly, do you think the markets should take note of Moody's reaffirming their outlook and rating for India? Do you think that could add, potentially bring some cheer to equity markets?
Well, Sandeep, interestingly, this isn't the first time this has happened. Whenever we've had Moody's come out with any rating action on India, you've had S&P come out and affirm its existing rating. So that's exactly what you're seeing happening now. S&P has revised its outlook on us. Moody's has maintained a stable outlook on us, and you will, I would imagine, within the next 1 hour, see officials from the finance ministry and officials in Delhi actually, going around touting the Moody's rating as being the more reliable of the two ratings, and the markets possibly reacting favorably to that and paying little heed to Standard & Poor's. So Moody's coming out and reaffirming a stable rating on India is a positive. You will possibly see the majority of people want to believe the Moody's rating rather than the S&P rating, simply because from an overall perspective, the India story still looks good despite the number of challenges that we face.
George, you want to read into the fine print of some of those comments coming in from Moody's? They're saying that while the government's finance profile is the weakest that it has been in a while, but they're hoping that the investment cycle will turn around. So not as bearish as S&P.
Yes, in fact, Sandeep, some of the positives that Moody has really spoken of are the fact that India is, of course, a large and diversified economy with robust growth prospects, and I think no one will even for a moment deny that. They've talked about the healthy domestic savings rate, and we continue to have one of the highest savings rates in the world, and that's expected to stay, even if it has come off a bit in the last couple of years. The private sector, it talks about the private corporate sector continuing to remain very competitive, and the fact that we have an adequate international reserve in order to absorb any external shocks should we face them. Some of the negatives, or rather some of the challenges that Moody's has spoken of, are the fact that the large government debt and deficits are of an alarming nature. The fact that you are continuing to see, government borrowings crowding out the private sector. Inadequate physical and social infrastructure, that's something that we all know of. Persistent policy uncertainties, again something we all know of. And the low per capita income, which has been talked of for many, many years. Now, all of these are the same issues that S&P has flagged off and chosen to change the ratings outlook on India. I think the points listed out by S&P and Moody's aren't very different from each other. Moody's, however, maintaining a stable outlook. And interestingly enough, Moody's believes that the GDP growth for India in the current financial year will come in at a level of 7%. Now, this is against the 5.3% number that S&P is speaking of. And also, the current account deficit that that S&P has said is difficult to be achieved at 3.9%. They're continuing to believe or maintain that we will have a current account deficit in excess of 4% even in the current financial year because of external challenges. Moody's believes that that number will come in at something like 3.8%. So the Moody's view of India continuing to remain a whole lot more optimistic than Standard & Poor's, and I think the big positive is that its outlook on the Indian economy remains stable. We remain at BAA, at the BAA rating, and the outlook remains stable.